Hey everyone, Tony here, and today I'm going to be talking about the #1 trading strategy that I'm using in 2020 in order to make profits consistently and help my students grow their account. This is a very scalable strategy. You can use it if you have $500, $1,000, $25,000. It doesn't matter. It's very scalable, and it's the best way to capture the most of the move in these small cap penny stocks. You can buy in right at the best level of support and you can take profits on the way up, and it's really stress-free trading. One of the things that I say all the time is that if you can perfect the entry, then the rest of the trade kind of just takes care of itself, and that's exactly what I'm going to be talking about today. So the video that's going to be coming up is a recording I did of my webinar from yesterday with my Trade Buddy chat room, and it's going to talk about the move on AGTC. This is a stock that had a move from about $5.40 to a high of around $10, nearly $10 in just a single day. And we actually saw the same thing happen today on CPAH, where it ran from $1.32 to a high of, I think it went over $4 per share. So same exact strategy, but this is going to be only talking about AGTC. I'll be making another video in the next few days just breaking down my trade on CPAH because it is once again a very easy play and strategy to use. So before I start the video, I want to give a really big shout out to one of my students, Arthi. She started trading options around 8 months ago, and now I personally do not trade options. I've never learned it, but she joined my program and she learned how to become super disciplined and super consistent with her trading, and she was able to grow her account from $400 to over the PDT rule of $25,000 in only 8 months. That's a 6,000% gain. So it just goes to show what you can do once you learn the fundamentals of trading and you understand trading psychology and discipline and understanding that you need stats in your favor to grow your account. So huge shout out to her. I can't wait to see her break $100,000. I know she can do it. And with that being said, let's get into the video. All right, so trades that we're going to be talking about today are LJPC and AGTC. These are two stocks that had extremely good setups today. They fit my #1 pattern perfectly. And when we look at AGTC, this one was like 100% A+ setup. It hit all the check boxes that I have. Had the first green day on news. They released news this morning of that positive 6-month data from their ongoing phase 1/2 clinical trial. And you can see it had a positive reaction in pre-market to that news, had a nice gap up on a tiny bit of volume. And if you just look at the daily chart, once you see this news drop, you would look at the daily chart to just know how the chart looks. And the first thing you would see is that the 1-year high, the 1-year resistance, is in this $5 to kind of $5.30-ish level. So one of the most basic rules of technical analysis is previous resistance should hold as new support, meaning that if you have a huge breakout with a good catalyst, then you would want to buy the dip into that previous resistance, expecting it to hold as new support. It doesn't mean that like it's guaranteed to hold as new support, but there's a very good chance if you have the right factors in your favor. And if you're wrong, then you can just cut the loss quick for a small loss. So that would have been a very, very, very solid dip buy to take. That was obviously the #1 dip buy to take all day. Just using that very basic knowledge of having a low float stock, having good news, a positive catalyst, has a breakout above that, and then you buy the first dip down to previous resistance as support. You don't need anything else on the chart. You just need to know what the catalyst is, know what type of stocks to look for, and know how to look at the daily chart and find previous resistance as new support. It would have been a very awesome entry. Unfortunately for me, I guess I was just too tired this morning. It was like 4:10 a.m. for me, and I looked at this stock when it spiked up. I looked at the news. I was like, okay, this seems pretty good. But for some reason, I just completely blanked on checking the daily chart, which is kind of surprising because that's usually the first thing that I always do. But I was just, I don't know, just looking for whatever else could run. And I skipped that very important step. You can see from there, I had a very nice bounce from the 520s into the 7s. And from there, you know, it just set up a very, very big short squeeze. One thing that we were mentioning in chat was, you know, just the fact in pre-market that it's holding, once again, on the 5-minute line chart, the previous resistance as new support. You can see the previous resistance here intraday is around 610-ish, and it held that very nicely in pre-market too. So if you want to go for a quick trade, just playing the lines, you could have easily hopped into the 610s, the 615s, and locked in partial profits into the 7s. And you could have tried to hold more, like to see if it would have a higher squeeze, which ended up, you know, hitting that resistance perfectly. And then from there, it was just trapping shorts. One of the main things that we've noticed this week is that lots of the stocks that are hot in pre-market, they like to have very weak opens and then they turn into all-day fades. What that means is that, you know, usually they would have lots of activity in pre-market, but then they would break VWAP, they would break the pre-market support, and then they would just fade off all day. We've seen that happen, I think, 4 or 5 times now this week alone, and many times last week too, which means lots of shorts are comfortable with the idea that, like, once you have the break of the pre-market support, you can go short on the bounce into VWAP and it's gonna like drop the rest of the day. You can see that happened perfectly yesterday with WAFU, where it did basically the same exact thing, where had a very weak open, bounced up, lots of shorts loaded up here on VWAP, and you can know that because of the huge volume increase there, meaning lots of trades went through. Long top wick means lots of selling pressure there, which means likely shorts. And then the rest of the day, it just fades off. So shorts have been very comfortable with this idea that if they wait until the stock looks weak and they go short on the bounce into VWAP, then it's likely going to want to fade off the rest of the day. But one thing that happened with AGTC was the simple fact that it was still technically holding previous resistance as new support. You can see, if I just lower this line a tiny bit, overall, it held that level. It doesn't matter that it broke it right here. Eventually, it reclaimed. And this was just a trap down here. It was a fake breakdown. And now imagine you have a ton of shorts who are going short into here and say that they're risking the break over high of day, like 730, right? And their profit target is, say, down in the 520s, the previous level of support. And then it starts to ramp up into VWAP, lots of volume, and then it breaks the high of day. So now all of these shorts who are planning this trade and they're risking the break of high of day, they're going to do one of two things. Either they're going to leave the trade and buy back, which means they cut the loss quickly. And if they don't do that, then they're going to hold and hope that it's going to drop back down because they don't want to take a loss, right? But then it breaks higher and higher and higher, and it goes to 8. Now all these shorts are in massive pain. Like, they're down over $1.50 per share. Now they're panicking because they didn't leave the trade quickly enough. They did not cut their loss. So what do you think they're going to want to do once this has a pullback near their risk level? They're going to be more inclined to want to cover down there and minimize their loss, which is exactly why this whole idea of previous resistance holding as support works, is because once you have these pullbacks, you know that all of these shorts that are trapped, like, they're going to want to be inclined to leave the trade, which means they're buying and they're holding it as support, which is going to make it keep squeezing higher. I have lots of very good lessons on this within my course. It just talks all about how short squeezes work, and why you have levels of previous resistance hold as support. It's a very important concept to understand. So the point that I finally hopped into this was once I realized that, okay, yeah, this is, making a very nice squeeze setup. I'm going to look for an entry on this first pullback. And I was first trying to buy into this pullback here. I was trying to buy in at like 712 on this like dip here. Unfortunately, the lowest it pulled back was 717, and then it broke higher. So I'm like, okay, I likely cannot, have an entry that low. Let me look to the daily chart and look to see where is the next level of previous resistance. And I use that using the line chart. And you can see right here very clearly, we have a tiny top here with lots of big volume, which means that people will notice that level at around 737. So I said, okay, that's the next area I'm gonna look for a pullback. And I left orders on top of 740, 741, 742. And I got filled on this little drop here. And you can see it held 737 perfectly. So if there's anyone who says that, using charts is complete hindsight, then they just don't know what they're talking about, because it worked perfectly there. And from there, now my whole bias with this trade is that, okay, as long as this thing holds previous levels of resistance as new support, it's going to keep stair stepping up, and it can potentially turn into a supernova squeeze. And I'm just watching this thing with an overall profit target. Once again, using the daily chart, overall profit target that I have is number one in the tens. In this area here, I'll box it out. You can see resistance here, and we see lots of resistance here near the 11s and 12s. Lots of resistance up in this range. So I'm gonna use that level as my overall target, and I'm gonna track the price action just by just watching the 5-minute line chart and making sure that every level of previous resistance is gonna hold as new support. You can see right here we have previous resistance held as new support. We have previous resistance right here. Previous resistance here, held overall as new support. We have previous resistance here, and so far it's holding overall as new support. So as long as it keeps doing that, then I'm just going to keep holding it until it can squeeze into my target range. So number one thing, of course, is that I definitely just missed out very big on not checking the daily chart down in pre-market. But that's fine, because once I noticed how the overall thing is playing out, and I noticed the big squeeze potential, I just said, okay, that's fine. I didn't get the best entry, but let me still hop into this because it looks like a very clear short squeeze. And I used, once again, using a level on the daily chart to hop into the support. It's the same exact thing as down here. It's just one level higher, right? So that's basically what I'm planning with AGTC. All right, hopefully you guys enjoyed that lesson. There were lots of golden nuggets, and I just want to break down one last time what the A+ strategy entails. So first off, you have to find a small cap stock that has a news catalyst. This means they released a PR, a press release, either yesterday in after hours or today in the pre-market. Second thing you want to do is you want to look at the daily chart. This is the most important thing, and you can see I failed to do that on AGTC. You need to go look at the daily chart and mark off your levels of support and resistance, and just get a broader understanding of what the chart looks like. If it has a big downtrend, take note of that, because that usually means that there's a lot more resistance up ahead. If it's flat with a ton of spikes in between, that means that the stock is able to have big spikes when it has news. If it has a multi-year breakout, of course, that's going to bring in lots of hype, lots of volume, especially if they drop news on that breakout. So number two, once you're looking at that daily chart, switch over to the line chart and mark off the known levels of support and resistance, and also mark off where the 200-day moving average is, because these are the levels that you're going to be buying the dips into on the first pullback, as you saw on AGTC. Second thing, once you have your entry, of course, you need to have a risk level. Not every trade works out 100% of the time. This strategy I've found works about 65% of the time, which is very good with the risk and reward ratio it has. So in order to find that risk level, first thing that you need to do is look at where the known resistance levels on this stock are. So for example, on AGTC, we knew that there was support around the 540s, and we had the next known level of resistance at around 737. So that means you have a profit potential of at least $2 per share. So if you're able to profit $2 per share, which on AGTC would be about 40%, 35%, then you can comfortably risk anywhere from 5 to 8%. So from there, you look at where your entry is and you look down like where around 5 or 8% is, and you can have your risk down there. And if the trade holds as support and it works out, then just sit back, let the stock do its work, and let it hit your profit target. Lock in some partial profits, and if the stock looks strong, if it's setting up a nice intraday chart, then hold for the bigger move and take profits as it keeps breaking out. The number one thing with this type of trading is that you want to be buying into weakness, buying into dips, and taking profits into strength. This is the most important thing. So many new traders fall into the trap of thinking that they have to buy into breakouts and take a quick trade. While this may be a good strategy, number one, it's pretty risky. And number two, it's very hard to grow a small account with that type of strategy because you're locked down to only making about 10-15% max on any breakout trade. Whereas with a play like this, you can easily make 50, 100, even 150%. It's pretty common. So this is hands down the number one way to grow an account if you're starting out on trading small caps. So with that being said, hopefully you guys enjoyed this lesson. If you guys want to get more lessons from me and direct mentorship with me, I have a lifetime mentorship program. It's the first link down below. You can check out everything about it. And once again, I would just want to give a big shout out to Arthi on growing her account from $400 to $25,000. That's a very big milestone. So with that being said, if you like this, leave a comment. If you have any questions, hit the like button and hit the subscribe button to be notified of any future videos. And I'll see you guys in the next one.